following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman. My pleasure to be here this Monday, the 9th of May. And of course, you've had a few hours of great shows here at TFNN. I hope I can keep that standard up. Let's go straight to the market. We've got the Dow down 22 at 17,716. S&P's up 2.25 at 2,059. The comp index is up at this particular point. Well, is it still up? That moved away. Let me just check it out here. Yeah, the comp index is at this point up 18 at 47.54. This is going to be very interesting. You've got gold down $25 at 12.68. You've got silver down 45 cents at 17.07. Platinum's down 34 at 104.6. High-grade copper back at the 211 area, down 4.10. Crude oil is down 69 cents at 43.97. And you've got bonds up 12.30 seconds at 165 and 13 seconds. Now, of course, the big thing here to be looking at is the dollar. The dollar at 94.07, up 19 cents, and the euro down 0.008 at 1.1394. This is going to be a very important moment. And, of course, you've got the VIX index right now. The VIX is at 1492, up 20 cents. What is going on? As the weeks have gone by, I would say the last 5 to 6 weeks, the picture for me is just getting clearer and clearer and clearer. Well, sometimes it's clear. Yesterday I woke up in New York with the fog across Manhattan, but it started to clear up, and I think that that's what we're getting right now. Oh, seaplanes. Let me just talk about that briefly. Boston is trying to get permission. Two airlines are trying to get permission to use seaplanes to go to Manhattan. We were right there on the Hudson. Well, it's a beautiful walkway that takes you out into the Hudson. It's where the ferries dock, and we were just standing there yesterday. My son, my wife, and myself. We were just talking and looking out at the fantastic view. Saw those buildings. Remember the American Copper buildings? Just a plethora of cranes up in the sky with new buildings going up. And these seaplanes, as we've often experienced, come in and out of the on the East River, and is a seaport, and it goes close to well, they're different parts of the parts. I think 22. So it'd be on the 22nd, maybe 28th, somewhere around there. There are different docking and landing areas. And all of a sudden today I see in the Boston Globe front page, seaplanes, and they're trying to get permission to go from Boston. And you know, Boston in the wintertime when it's iced up and all that, I'm not sure how they're going to work that out. But at least for much of the year, Boston to Manhattan in about 90 minutes. That is a breakthrough. Now, the cost would be something like $1,000, so you really want to be going there on business or something very, very important. But it's possible for businessmen to go there and back, go there for a morning meeting and be back just after lunch. You see, this is a different age. We're talking about speed of communication and now speed of travel. So, of course, that's without the traffic jams or anything like that. So, there are a lot of things in that potpourri that I look at with skyscrapers, with the socioeconomic, political, and trends match between now and what happened in the late 1920s. That goes to politics. I'm going to talk a lot about politics over the next 2 weeks. Not politics of who you should vote for, but the politics of politics. Meantime, back at the ranch, let's just get to the nitty-gritties here. You've got the 120-minute mini chart, and if anyone's emailing me, like you usually get a bunch of emails, I do have some problems here. there are a bunch of emails that haven't come through. They're sitting there, but something went wrong. So I won't be able to do anything until tomorrow or the next day. I do get some, and sometimes it's a little late. So there's nothing much I can do about that. Now, the E-mini is down 75 cents at 2,052. What's really important about this is that you remember that arch, that large arch that went to the April high, April 20th high of 2105.25, and then started on its way down. Well, that arch went all the way down from the 20, where was it? Oh, I typed it in. That's where I got the match. From the 29.25 level of the 11th of April, going all the way to the 2105.25 and then back down. We went to 2030.50 last week, and then had that bounce Friday, that turnaround bounce on Friday. Now, what's really important about this 120-minute E-mini chart is that there's another arch, and there's tremendous. There's a trend line resistance. There's 200-period exponential moving average resistance at 2063. The high today is already 2059.75. So we went to peak B, and now we're arching over. So there are a bunch of things that I want to do. So just to really sum up backwards, I'm going to do this. For my subscribers, we've remained short. We didn't want to cover. I didn't want to switch. But what I did do is we grabbed an ETF that we were already short, and then we got the 2 times long this morning, went long, and that more than made up for the difference between it rallying while we were short and because it's 2 times long. And so far, it's still acting really well from our entry point. I don't care if it's just a short-term trade. I don't want to change my short positions at this particular time. I've spent so much energy and time and whatever it is it's taken to be able to assess the markets, to get a feeling for what should be happening. I do not want to be either shaken out of my thinking, not until the evidence is there. And so far, the evidence suggests very strongly that this is still a corrective phase. Just make it real simple. Corrective phase. You can see that 9-period exponential moving average in the daily chart at 2058 was the repellent. The high today is 2059.75, and 2058.50 is that 9-period moving average. Just got there and now it's pulling back. The MACD is still very weak. The stochastic did have a turnaround, but it's in the under 20%. So a lot has to happen for it to improve. The weekly chart is suggesting very strongly it is time we need. We don't necessarily need price. At 2049 in the E-mini, you could go down to 2042. You could touch the low of last week at 2030. You could even go below that. But there should be a consolidation. And even if there was a rally, remember the chart that we were looking at? This chart here? Well, we went right up. The high today is 17,783. So we tried to get above it. We couldn't. We got stopped right at this gray line, the 9-period exponential moving average. And right now, we're underneath. And that's really what's important. Dow's down 63. S&P's only down 2. I'll be right back. Basil Chapman. I'd love to take your calls, but there are a bunch of things I also want to talk about in terms of chart patterns. Be right back. Yep, I am getting the emails on this particular server. That's good. I'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solutions CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I looked at this chart, and 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 I said, something's wrong. Remember, all week I was saying, I'm going to go with I think it was the USO, because I have an E, and I don't know what's going on here, because everything about it looks like it should be atop of the doji candle and all that. I'm looking at the New York Harbor Blend stock RBOB June contract, and lo and behold, I missed the inside Chapman Wave buy mode right there. I just didn't see it. Usually I'd pick this up in a second with an instant restart. What is a Chapman Wave instant restart? This is the Chapman Wave instant restart. Let me show you right here. So this is introducing the Chapman Wave methodology. This is my CD available at TFNN. And if it can come up here, there it is. Put in the password. There we go. Got it. And there it is. And we're going to go to chapter 19. And what is chapter 19? The instant restart page or slide 346, etc. And what does that imply? That says that when you have from the lowest, most identifiable low, series of 4 higher peaks going to peak A, peak B, peak C, peak D, and then you get within 3 bars a particular chart formation, and it spikes to the upside and it breaks that D, you can have what's called the Chapman Wave instant restart. And it basically is a recycling of the waveform. You use an alternate account immediately. You can go E/A, F/B, G/C. You cannot go to an H. There's no such thing as an H. It has to be a D, and then you get the D. This is in slide 348. It explains it and goes through it very carefully. Now look what happened. You go to from the low that was made. Now, of course, this is the June contract. So the low that was made on the 9th of February at 1.1528 went to leg A at 13288 on the 16th of February, pulled back. And then I missed this. How could I have missed it? It went to an inside buy signal to buy mode peak A, peak B, underneath the previous high. and then spiked through and went to a C and then a D, and you get your instant restart. That starts peak E/A, F/B, doesn't break the low bar, starts and goes to C, D, and lo and behold, you get your tiny little doji candle, smallest candle, in fact, one of the smallest candles since the start of the move up. And right there on the 29th of April at 1.618, you get your doji candle, sharp pullback, that big red candle. Under the 9-period moving average, you get your down arrow, you get your fader in the stochastic and the MACD, you get your left side, look, left side, almost, a left side, right side, price time move. And this is what was, let me explain. I go through this carefully now because the plumb line is here. I was asked about it on Friday. I think I did discuss it on Thursday and Friday, but I don't think I completely finished my thought. So it's great when the plumb line can be where you've got a left side that you can consider the start of the move down. You can get the cup formation, and then you can get pretty much a matching price move. Now, what I do is I go to a left side low bar to get that Chapman wave inside wedge target line. So yes, so here's the answer, Julie. RBOB gasoline has in fact made a daily peak E, and it's on its way down, and it looks to me at 1.45. The next support is at 1.414. If it breaks that, it retests the low of the 6th of April. So let me do that. Now let me go to the USO. Oh, good question. Oh, a bunch of calls. How many calls have we got? Let's go straight to the USO did make that peak. Ian is pulling back. We're going to go to Greg in San Mateo, California. Greg, how are you?
Well, I'm well, thanks. How are you, Basil?
I'm well, thank you.
Good.
You'd like to look at
the natural gas fund UNG.
Are you in it at the moment?
I am. I'm in the 3-time short of that, the DGAZ.
That's DGAZ?
Correct.
Okay, DGAZ.
It's making a nice little wedge formation there. My thought is that it would break down possibly before inventory comes out on Thursday and make a leg C and then maybe a leg D. But now I'm not sure. I'm wondering what your thoughts were about that. I'm up, currently 5.5%, and I'm wondering if maybe it might just go sideways until Thursday or come back up and test that.
No,
$7.
I think you're on the right track. In other words, you have bought the 3 times short natural gas. Is that
Right.
correct? Yeah,
That's
because that's the exact opposite pattern we're looking at. I think you're on the right track. It's so difficult with the 3 times because of the speed. For instance, I had a caller the other day who was in dust, and we were looking at it and said it should go higher because we were looking at gold possibly pulling back sharply, and lo and behold, you had that one pop up in gold, and that dust pulled back very sharply. And today it's even higher than it was the other day. So these things move very quickly. So if you don't mind, just for the moment, let me look at the UNG. The way I'm looking at UNG, it made a peak D in the daily, and this is United States Natural Gas Fund. This is basically the long side of the gas. And if you look at the weekly chart, it's starting to roll over. It's making an H pattern. The monthly chart is still it's shockingly bad. I don't know what's going on in this particular instrument. Of course, it could pop up at any point. I think you're absolutely on the right track. So now how do you do this? So you're in it at a nice DGAZ. You're in it, and it's acting okay. Okay, I'll tell you what I'd like you to do. Just keep following. You'll have to follow the UNG, but for your DGAZ, which is trading at 16.10, down 2 cents right now, but it's had a very nice move from the low of the day. If it can close today, 16.
Well, you can do the UNG. That's fine because I don't actually. Yeah, I just follow the UNG.
You do. Okay. Well, see what happens occasionally. Not all the time, but often enough for me to be aware of it, is that sometimes natural gas goes in an opposite direction to crude. I'm not sure why that is. I heard it explained once, but I was listening with half an ear, so I said, "Oh, that's interesting," and that's all I remember from it. But basically, what we're looking at in the UNG at 6.79, it's struggling to close above the 9-period exponential moving average. The high that moving average right now is at about 682, and it's trading at 679.
Right.
The stochastic is pulling back. The MACD is negative. I would not be surprised if by the end of the day, if $6.70 to $6.68 support is taken out, then UNG will pull back a little further. This is the way it's looking to me right now, that it's making a pattern. It's a little bit of a diamond pattern, but most importantly, it's making lower lows and lower highs. So I'm just going to be very safe and say to you, based on the 120-minute chart, it should be, UNG should actually be a little higher now. So it's not, and that's saying to me, yes, there is still internal weakness. So if I'm looking at this as objectively as I can, I think that it's going to pull back. I'd be a little bit careful on your trade if UNG starts to trade above 684 to 6. What was the high today? If it takes out the high of 6, if it takes out the high, I'd just get out and I'd hold tight. I'd just not do anything. But at this point, I think you're right. Thanks for calling, Greg.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. And just before I go to Joe in Boston, I just wanted to say, as far as Greg is concerned, I meant to go to the natural gas contract itself. The natural gas contract has said that the 9-period exponential moving average is really like a magnet here. So the further away it pulls back, it's at 2.101. If it takes out this Chapman wave inside track support level, and at any point over the next day or so, it goes under 2.045, that's very negative. One of the things I just wanted to say that inverse relationship sometimes between crude oil and natural gas, that might be in effect now if, in fact, natural gas takes out today's high. And in this case, it's 2.126. And if you're looking at the UNG, which we discussed, if it takes out today's high of 6.86, 6.85. Just wanted to make that clear because I'd keep this real tight. You never know with natural gas what can happen. It's a strange beast. Let's go to Joe in Boston. Sorry, Joe, for keeping you waiting. How are you?
I'm very well, Basil. How are you?
I'm getting much better now that it's getting sunny again. Wow.
Yeah,
that
absolutely.
was 5 days of record 5 days of gloom we had here. They say that it's the longest period we've had, or 5 days with not even 5 minutes of sunshine in the first week of May. But
yeah, it's been tough.
but at least it's over. Now we're looking at the sunny and bright. So you'd like to look at the SLV, the iShares Silver Trust?
Right. We've spoken, a few times over the last couple months. I've got a position. I've got 50% of my position filled. I've had 2 purchases so far in SLV, averaged in around 1450, and I'm looking to, add my 3rd position. And I was wondering if you thought it would fill that gap. We actually had kind of a double gap, but the one there where it gapped up from 1550 up to 16 something, and now it's kind of back down. And I'm wondering if you think, might be able to get it in around that 1550 range.
So this is what I want you to just, I spent a little time over the weekend. I didn't have all that much time to do my charts for subscribers as I usually do. I did get quite a lot out, but not as many as usual. But most importantly, I did want to take a little time because I showed the gold chart the other day. And then I showed, now that you've brought me up to date with the silver, I actually looked at the SI, forgetting all about the silver. And the SI, because of today's action, I'm putting in a down arrow in the daily. And the weekly has made a peak. It will make a peak D if this week there's no new recovery high above 18.060. Now let's go to the SLV because it does track the chart formations of the SLV. The iShares Silver Trust is really very, very close to the, it should be, but sometimes they're not. In this case, it is. Now, what we've got is that it's close to the silver contract itself. You've got those 2 gaps. There was an island reversal, a really strong positive island reversal on the, what day was that? That was 11, yeah, the 11th of April. 14.93 was the low. The day before was 14.65, which meant that all of these bars, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, about 13 days of trading that gapped down from the 20th of the 22nd into the 23rd. All of that left what's called an island reversal. I've circled in yellow and it really does now look like an island. Fact is, we've got another island reversal all the way up again. So as you were correctly talking about, there's a gap. There's a gap from that, the low of the 8th over the weekend. On the Monday, it gapped up at 14.93 on the 11th. And then on the 18th, the high was 15.53. And on the 19th, the low was 16.04. So I'm thinking, because unless I'm really misreading things, I believe that we've got the potential for a timeout. I've been talking about this for a little while now. A timeout coming in the silver, the gold, and the commodities in general. Let me just put this together while folks are looking. TRCCI. This is the Reuters Equal Weight Commodity Index. Is actually Thomson Reuters. And if you look at this, it shows the same kind of gap, got a down arrow. One of the reasons why we got out of our ETN, which was made up of gold, natural gas, soy, oil, sugar, I think just a whole bunch of the different commodities. Got out of it because I think we took our profits, and I'm going to try to get back in later. Now, let me explain what I could be completely wrong in the timing, but I'm going to go back to the SLV because the commodity index only made a peak C. That tells me we should still make a D. The doji candle that we've got in the SLV back on it was April the 29th, tells me from the action that we're looking at right now, that there's a real good chance not just to fill in the gap to the high of 1553 on the 18th, but actually to get into the whole area of between $15 and $15.50. I'm thinking that if you have enough patience, I'm not going to say to you change your strategy. I think your strategy to get into the commodities, to get into the silver, there's nothing wrong with that. Timing wise, I would wait for the third. I'd like the third entry point to be as close to trying to get near what could be a significant low as possible. And 1481 is the 200 period moving average to 1436. That's, to me, my eye says, now this could be wrong, but my eye says it's a good chance that we're going to use a lot more time than priced in this correction for the commodities, because it's a rotational thing. We might even see natural gas actually move up while perhaps crude oil pulls back a little bit. But I think that the metals, the gold and silver, let me just put the gold here, so we're talking apples to apples, and the gold index has made a peak E, and it's suggesting that you could come down. It's at 120.86, so 119.63 is the 9-period moving average. I think it's going to be different. It's going to be more like a rectangle formation. So I can see about a 3 to a 4% correction, maybe even a 5% correction in the gold index. So the silver, if that was say a 6 or 7% correction from $17, that would, yeah, that fits. That means that you could come down to the mid 15s. But my thinking is that if you could grab that third position, that would be your final position, right?
No, I'm actually looking to do 4. So I split it up into 25%, 25, on my way to a full
So
position.
that makes it even better. Then I'm going to say to you, you said about 1550.
Yeah.
Yes, then let's do that. I think that your third position in that 1550 area, and then you just put some kind of crazy number in for the next one. And if you don't get it, you don't get it. But something crazy like 1485. And you hope you don't get that. You really want 3 really good, strong positions. That fourth one's going to say, hey, wait a minute. Now you could see all 4 positions in a losing position if it keeps going down. So that's why I like to. The strategy you have is perfect. Then it gets real tough if you actually get your 4th position, because that fourth position I prefer to have it as an outlier, so that when it comes back, say if it goes to 14, say you get it at 1480 and it goes to 1450, it means that when it comes back, and if it comes back really strong and then it gets to 16, it means that 2 of your positions were bought so nicely that they've really given you a fabulous average on your 4 positions. You know what I mean?
I do.
So I'm with you. So let's stick with that. We'll talk about it more. I don't think it's going to happen in a day or 2. I'd prefer it takes a little time to get there, but that 1550 would be the area for a 3rd position.
All right, thanks, Basil. I'll check back with you in a couple weeks.
Thank you very much, Joe. I'll speak with you soon. Dow's down 55. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So a question here about the FXI, which is the iShares China Large Cap ETF. Made a peak G top in the daily. It's pulled back very sharply. It's in leg D down. It's trying to find support above the low that was made, a key low that was made back on the 10th of March at 31.38. It's trading at 31.73, down 38 cents. The weekly chart has pulled back a little bit too much. I'm not sure I should put an up arrow in implying that it would go higher than that peak C, at least not for now. So I'm going to hold off on that. Monthly chart is still just an eyesore, really. I mean, this is not good. It's broken key support levels all over the show. So the question, let me see what the question, it was a good question. Let me see if I can actually read the question here. So Bob says, W pattern in the Dow on chart just shown. Okay, that was that. What happened to the FXI question? Where did that go? Oh, that was a different question. Different person. Oh, there it is. Yeah, FXI China ETF, high-grade copper, big down day Monday after Friday's big down day. Big warning about level of debt in China relative to GDP. Could we have a summer crash in 2016? Please analyze. So, okay, those are really good questions. So let me do this. You're looking at the FXI, which is basically the China Large Cap ETF. If you look at the monthly chart, you'll see that the MACD is still coming down. Stochastic has tried to rally with the price, but it's still under 20%, so it hasn't shown any sign of strength yet. The price is back under this month so far in May. The price is underneath the 200-period exponential moving average, but we're not even halfway. This is about the first week or so of the month. So all I can say is that the FXI is a heads up. And as far as a summer crash is concerned, that's kind of the thinking for the bears. My thinking is that we're going to come down, that the 17,300, 400, 300, 200, somewhere in that range, above 17,000, we're going to find some support. And then out of the blue, it seems to me like we are real close to some kind of, whether it's a Clinton or a Trump rally. My thinking could be a Trump rally. Just things will suddenly be seen as maybe being positive for the stock market. I'm not sure. But I think there's going to be a rally to a new all-time high. That all-time high is going to be saying to me that a crash is unlikely, but a very serious decline from the high is likely. But the monthly chart now has gone into buy mode, meaning that over a period of months, we're going to go to higher highs. There's a whole thing that I'm going to outline over the next week or so for subscribers. It's my thinking. It doesn't mean to say it's correct. It's just my thinking as objectively as I can. And we'll get there. So the answer is no, I don't think there's a crash. I do think that we're going to be impacted negatively, at least in the nearer term, by things like Japan. The other question was the crude oil, the candle. Let me just see. Yeah, I've kind of done that. I'm going to have to wait a day or two to see where crude oil stops. Let's go to Scott in Safety Harbor. Scott, how are you?
I'm just trying to figure all this out, Basil. The POT, I'm not invested right now. The POT, I'm looking for and I'm still interested in that because unlike many of the others, it's already it's $1 away from the 52-week low. It really hasn't caught any of that upward momentum with when the water rose on these other things. It didn't go up.
So, okay, we're looking at potash, which is the potash, the name of the company is Potash Corporation, Saskatchewan. It obviously mines potash and other minerals. Most importantly, that monthly chart has made that H pattern, and that says that it couldn't even find enough strength to break the 9-period moving average. So far, I have to put that monthly in the category of not yet. The weekly chart is making now, it made the cup formation, failed, and now it's reverted to, let me just draw it in here, the arch
did
formation.
you ever get a chance to talk to, I think it was, isn't it Larry that does the agriculture's stuff at...
Andy. Andy does,
Andy,
yes.
yeah.
I didn't, and he's got this fabulous course that's out, but I just wasn't here over the weekend. I wanted to go through some of it.
Play out there somewhere. I mean,
yes,
it's not like they're going to stop using
I'm also going to ask you, make it a recommendation. Why don't you call Andy tomorrow afternoon? Talk a little bit about the agricultures and talk about potash. I'll talk about it just as a chart pattern. What it did take, potash POT symbol trading at 1565 down 24 cents, actually took out intraday today. It took out the low of the 12th of April. That was the low of 1554, where it had a 3-point rally. That's a 30% gain, and then it gave it up. It went to 1875. I mean, that's big. And now it's gone down to a lower low. This is exactly, let me go to the 120-minute chart.
All my players are on the bench today, X and CX and all of them.
Yeah, well, X, I think, remember, we spoke about that. I thought X is, U.S. Steel needs a timeout. Alcoa needs a bit of a timeout. Let me just do this here, left side, right side, price, time match.
It's amazing to me how negative, I listen to a lot of shows, how negative people get so quickly. I mean, this is a normal... just a little retracement. You'd think it went down 50% or something.
Yeah, you just brought up a really good point. On the upside, when the market rallies about 80 to 150 points, there's almost a kind of a blasé attitude as if, that's what it keeps doing. And as soon as we drop 80 points or 100 points, it's like, oh my God, what's going on? So my thinking here is we have to start, at least in the near term, I think we have to change that thinking so that as the market goes down, the thinking is, we're going to...
more, Basil. They need to be more like you. I mean, like I said last week, when you've been dealing with something for months, like I've been dealing with Alcoa, it's really not a big... It was $6. Okay, so it was 5-something 3 months ago. So,
and it doubled in price. It went to $8 and... Yeah.
So even if it went down $2 right now, it wouldn't be that big of a deal. Doesn't mean anything's wrong with the company or anything else. I think that people just flat out don't do enough research.
So what we were talking about the last time we spoke last week is what I said is, hey, just take a time out. You like to go long these things, hold off because you're going to have plenty of time. Give them a little bit of leeway. I'm saying Alcoa is trading down 49 cents, down almost 5%. It's at 95.55. Start looking at it at about 9.20 to 9.15. X is trading down 12%.
No, I cut you off on POT. What was your final conclusion on POT?
My final conclusion is that the commodities, at my eye right now, says that the commodities need to, the metals need to a timeout. The softer commodities like potash, I think, I wouldn't be surprised if it has to come back and retest the lower that area of 1464. It's only a point away. So I would say to you, start looking at it closer at about 1490. That's where you can start looking at it. There is a chance.
I'll probably start at about 1550.
If you want to start at 1550, just be aware. I know that it doesn't bother you, but just be aware that if it tests 1464 and then closes below it, then it might still go down another 30 or 40 cents before it has a bounce. That's all.
What I like to do is kind of do like they do in poker. I stack up chips, and I have like four stacks of chips, like 25%, 25%, 25, and I'll put that first 25 in at the 15.50 and keep going on a 50 cent down every time it goes down 50 cents.
So that's exactly what I was talking to Joe in Boston about. Joe in Boston about just a moment ago in his SLV. He's got two positions. He wants to add the third position, and he also wants to add a fourth position. So that kind of stacking, I think, when you feel confident that the trend is basically looking at higher prices, then I'm with you. Then you want to be stacking. So but potash, I would start, and I would really want to see a turnaround.
Basil, you're missing some fantastic tennis weather down here in Florida. I know that.
I played some good tennis on Friday.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. As usual, just before the bell goes, I got a whole bunch of questions. So let me just do this one. Chris asks, hey, Basil, how are you doing? I'm noting that you think commodities are due for a small pullback. Bonds look vulnerable too. If this happens, wouldn't that be positive for stocks shorter term? I ask because I know you're still holding your index 3 times shorts right now. Could you please clarify, do these three ever go down at the same time, Chris? Chris, that's a really good question. I think that bonds right now are still stuck in a range. Oh, this is the 10-minute chart, folks, if you're looking at this. A bounce off that low, watching it closely at 252. If it goes above 2055, then you could retest that high of 2058. I just think that the market is just in a kind of a cooling phase right now. So let's just go. Chris, your question is, you see, the TLT, oh, did I have that or did I? Yeah, I got it right here. The TLT is holding well. It's up 28 cents at 130.73. I don't think it's going to break out just yet, but if you look at the bond my bond yield chart. This is not the bond yield chart. This is the bond yield chart. You'll see that it's just stuck in this lowercase h. Remember, this is my Chapman wave methodology. The lowercase h can go to a continuous lowercase m pattern. That's kind of what I think I'm doing right now. That's why we're looking at separate markets. The S&P is up $1.48. Dow's down 41. The IBB is up big. The IBB is up $5.84 at 261. This is a bifurcated market. So the answer is, you're absolutely correct, but I don't think that bonds are going to break out right now either way. I think it's just in a trading range. So the next one is Greg. Wait, whoa. Where did I go? Different mouse, different computer. Okay. This is just a thank you question. Thanks for the confirmation of shorting the IBB in Traders Corner on Thursday and Friday. I did LIBD on Friday, very nice bounce. Of course, now we've also got that position and we've switched one position. Look at this picture attached of Halliburton, a fractal. Oh. Yeah, this is all about, there was on 60 Minutes, there was this program last night, all about the fracking. I can't really get into that. It's just horrific what's going on. I don't know if it's directly related to fracking, but boy, if it is, that's going to be a real serious issue. All those earthquakes, that is. Let me just do XOM quickly. I'll get these questions done. We've got another 2 minutes. XOM, should that be pulling back now? Whoops, wrong chart. Right there. XOM. See, this is the TLT holding very nicely. XOM is, peak D. I'll be able at the end of the day to probably put a down arrow in. MACD's turning down, stochastic's turning down. Peak C in the weekly, it's still looking quite good in the weekly chart, but it's 87.43 down $1. I think you could test the 85s to 84s. That'll probably be good support. I don't have time for CVX because I got the next question. Of course, I just hit the wrong button. Quickly. And GT says, transportation. Yeah, I looked at this over the weekend. I was a little surprised. Look at the transportation index. The transportation index has pulled back very sharply from that weekly chart. So how about tomorrow? I spent a little time on the airlines. I'll look at the transportation index and the make of it. Someone remind me. It's not acting badly. It's just not acting well at this particular point. The weekly is still holding okay. So let me do this because we're about to wrap up the show. You're going to go for your swimming lesson, all the other lessons going on. Don't forget, Tom's got a webinar coming up, a whole bunch of things. Go to the front page of TFNN. Now, let me just do this. I'm going to show you the VIX index, VIX. It closed terribly on Friday. It went way under the 9-period exponential moving average. And that said that there is still internal strength, but holding in the mid-teens is still a positive. No. Holding in the mid-teens is still a negative in that there's still selling pressure. So if it goes down to 13, you're going to see this market fly. My thinking is that this is just kind of stuck at 1481. By the end of the day, if there's another sell-off, I'm not sure there will be, but if there is another sell-off and the VIX index starts to go to $15 is where you'll see deeper selling, and that'll impact the S&P. But at this particular level, it says, hey, there's still a little bit more buying than selling. So just keep in mind that we're having consolidation here, and this is the bounce that we were expecting. I'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.